Welcome, ladies and gentlemen. This is Rob. Welcome to this week's Power Hour. Hope you're all having a fantastic day. Let's go ahead and make sure you all can hear me. If you'd please go ahead and type the number 1 in the chat box. Let me know that you can. I would greatly appreciate it. All right, there we go. Jeff, good afternoon. Afternoon, John. William, good to see you. How you doing, Kevin? A lot of brand new names in here. A lot I'm starting to recognize coming back. So welcome one and all. Trader Will, how are you, sir? All right. So I guess officially, market's open. At least our market is open, right? The Wealth Builders market. Let's go ahead and jump right in, folks. So keep in mind, each and everything that we do today, every candidate we look at is all for educational purposes only. Nothing is meant as advice and or recommendations. So a couple of things coming up this week. We just had our inner circle over the weekend. Brandon Wendell taught it for us. What a great 2-day training. We did it Friday and Saturday. It was outstanding. The stuff that he went through on recognizing his zones, and then what we did on spreads on the second day was great. I've picked up a couple of tidbits of what I want to start looking at potentially adding into my trading system as well. Patterns in a Flash coming up this week. For Tony's teaching that for anybody that is a member of his Patterns in a Flash, you have access to that live training. Tony is the pattern whisperer, so you definitely want to go ahead and check that out. We've got Trading You coming up. The next one is the 21st of June. Mastermind group this week on Tuesday, tomorrow night. I've got a great topic set up for tomorrow, so I'm looking forward to that. Of course, you've got Power Hour and then Coach's Corner on Fridays. Make sure you get to Coach's Corner. Even though we did the inner circle on Friday and Saturday, on Friday, I snuck into the Coach's Corner to watch Ryan a little bit. What a great coach. What a great teacher. He's got some phenomenal knowledge about the market. Guys, make sure you check it out. It's all premium content at a very low cost of $0. Right? Power Option Plays, Covered Call Explorer, and E-mini Think Tank are all on the regular schedule for this week. And here's a follow us page. We just got an email this week that said, congratulations on the number of podcasts you've had downloaded. It's huge, huge number for us. We're stoked for it. Make sure you're following along with us. Actually, when we're done here today, Sean and I are going to sit back and record 3 or 4 videos that we've got planned out for you guys. Some for YouTube, some for other channels. Make sure you're following along at the various platforms that we're using here, right? So how did you guys do today as far as trades? Talk to me. Drop them in the chat box. I should have asked you this question already, so you were prepped for them. How did you do with trades today? How has the market been? Karen said Roku was great. Excellent, Karen. Good. So we got Roku on our list. Yeah, I've got a bullish setup on Roku here. I did not trade it today, but I'm glad. Who else? Come on now, there's tons of you in here. I know more of you than Karen are trading. Suzanne said no activity, day trades, entered Kodak covered call. Did you get the good premium on it, Suzanne? I mean, I didn't get a chance to look at it this morning. It's been nuts. Karen said Netflix, I wished I got in. I understand. Trader Will said up 12% on the small guys. Okay, 12% is 12%. I will take it all day long. Kevin said the YM, $500 on paper trade. Wasim, none, beginner. Good. Then you're in the right place, Wasim. You do not want to be trading it. You don't want to trade anything if you don't have the understanding of it. Do it on paper. So from that standpoint, Wasim, don't wait. Don't think about it. Just start throwing paper trades out there. I don't care if you're good at them or not. It's not about being right. For right now, it's about doing it. It's hitting the button, doing it over and over again. That's the only way you'll learn it. Leslie said, practicing selling puts and doing well. Good. John said, okay, on naked put on Kodak, TLRY diagonal spread on MGM, WBA, and Beyond Meat. Yeah, so my TLRY is doing phenomenal. Well, my TLRY is doing okay from last week, from Friday. My TLRY is doing okay. My AMC is doing phenomenal. My GameStop is doing phenomenal. My MGM is doing good, right? So overall, some of them from last week that we called out, working extremely well. Jeff said, sold some upside covered calls to work on digging out of a hole on MRAR. Okay, got it. Suzanne said it was a little late in the day, but still good entry. I think 10 cents less premium than your list said. Profit will be nice if it plays out. Yes, and I didn't know, Suzanne, if we we're going to get all that premium or not. I wasn't sure. It was really nice. I was surprised to see, because Kodak came up as #1 for covered call and the naked put, from what I remember. So I wasn't sure if we're going to get all of it in there, but it sounds like you guys did okay over the last couple of days. So that is fantastic, trading days. So here's a trade from today, guys. And this is a day trade. It's one that we do every single day. We look to put a trade on. This was a diagonal spread that we did. It's called a bull put spread. Bullish trade using puts, spreading out your risk with options. That's the idea behind this trade setup. And if you look, and I'll put my mouse over there so maybe you could see it better. Actually, let's see. I've got drawing tools here, don't I? Do I have controls here? So no drawing tools, right? All right. So I don't. So let me do this. I'm going to cheat. Shh. Don't tell Zoom I'm cheating. I'm going to pretend like I'm going to record the screen and then hit pause. Record the screen. I'm going to hit start. And then I'm going to pause it. Looks like I grabbed an older version of the program. All right. I'm gonna leave that go for now. You'll just deal with my mouse at this point instead. All right. So if you look right here in the red, it says vertical. This was at 9:35 this morning. We had a sell and a buy on this. It was on COUP was the ticker symbol. We took in basically a credit of $1. We had a 230 and a 232.5 put. Sure, the name of the symbol is COUP. COUP is the ticker. And you'll actually see it right here under symbol, COUP, COUP. All right. We got into the trade at 9:35. We'll even add the 23 seconds if it makes you feel better. At 9:35, we got in the trade. What happened? We took $1 of credit in on that setup. We got out of the trade at 9:39. We'll call it 9:40. So if we go 35 to 40, forget about the seconds. We go the shortest to the longest. It's 5 full minutes max that you're in this trade. And we got out of the trade at 30 cents. So we took in $1 and we gave back 30 cents to end the trade, 70 cents, one contract, $70. To do this trade, you needed $150 to do the trade today. That is it. 150 to make 70. I'm not a math guru, but in my head, that's close to 50%. 70 cents on $1.50, it's just under. So great trade setup. And again, Amelia does this every single day. She is without a doubt, one of the best traders I have seen come out of the strategies and the techniques that we teach. Amelia is an expert at all of them. She crushed it today on this. 70 cents in 5 minutes. Well, Rob, $70, that's like McDonald's these days for a family of 5. I understand, but you only put in 150. What if you put in 1,500? Now you took in $700. You see where I'm going with this? It's a lot different if you're adding contracts to it. Well, Rob, why don't you do more contracts? We do it on purpose, and there's a reason for it. To prove to you, to show you that you don't need 10 to do this. You need 1. What if you're starting with a very small account, $500? It's $150. You just put it at risk in a trade, right? What percentage of your portfolio is that? Not a whole lot, considering it's a small account. It's a $500 account. It may be a bigger percentage number, but you only have a $500 account. So it's not like you're putting $10,000 at risk. It's bigger to you, but you don't have to have a lot of money to do this, is the whole point behind it, right? That's why we do one contract at a time, right? Hey, Maurice, how you doing? So, John said 150 or 250. So John, how do we determine that? If you look at the difference between the two strikes, the one we bought, the one we sold, is $2.50. That's how much cash is required in the trade, 250. But they paid us $1. So that's $1 of the 250. So they're going to hold an entire $250, but 100 of it came from somebody else. That was the credit that I took in on the trade. Now, when you look at it, 70 cents of profit over that $1.50 of risk is minute. Good, John. Excellent. Okay. Glad it makes sense. All right. Beautiful. Beautiful. So this was the trade setup for today. The one that we do again, every week, every day, we do at least one trade from what we send out in Trade Watch alerts. This was one of them from today. And if you notice, this is TOS. We enter everything in TOS. We don't say we're doing it. We actually enter every single one of those trades in and place them right inside of TOS. They're all done in non-funded account. Just close that down. I don't need that any longer. All right. Beautiful. Perfect. Okay. Let me escape out of not that. There we go. Let's escape out of that. Let me go back and that window back up. Perfect. All right. So I want to talk about the Flip-Floppin Fed. Almost sounds like a bad word. Well, Fed could be a bad word, period. Guys, listen, what am I talking about? Flip-Floppin Fed. Blah, I can't even say it. Flip-Floppin Fed. That's why Amelia wanted to write flip-flop instead of flopping because of that. So what am I talking about? The Fed's all over the place right now. Their focus is not really, in my opinion, where it belongs. Their focus right now is on unemployment. But I want you to think about something. How much control do they have on unemployment right now? They don't have any. Who has the control? The government, who is saying we're going to pay X in unemployment above and beyond what the states pay, we're going to pay this. Right? I don't know if you saw some of the reports over the weekend, but there are companies now paying to show up for an interview. You're getting paid to go on an interview. It's crazy. It is absolutely crazy. Fed's running out of ammo. Yeah, they can come to my house. I could sell them some ammo. That's for sure. I got my fair share of it now. Oh, you know what I mean? Maybe don't mean that ammo. Got it. They're running out of stuff they can do, Baz. You're right. Without a doubt. But truly, if they need some ammo, I can sell it to them. I've got enough of it for quite a few people now. Right? I've been buying it and buying it. I talked to someone the other day who said they're going to start buying it as a commodity to resell because of how expensive it has become. And right before COVID, I had bought 2,000 rounds of a 9mm shell. And I forgot what I paid for it, 100 and some odd dollars, 175 or something like that. Right after COVID hit, it was more than double was the cost of that same, from the same manufacturer, the same shipper, everything was more than double, right? So everything is going up in price. If you saw, they had something on CNBC the end of the week. They had something on CNBC the end of the week last week that milk had gone up this much, and eggs and bread and shipping, and they were going into all different areas, all different facets of what people are seeing, and talking inflation, of course. And that really has got to be the job of the Fed, and I don't really think they're focusing on that. I think our numbers are off. I think we're in a lot worse shape than the government wants to tell us. I don't believe any of the numbers coming out. I don't believe unemployment numbers, personally. I just don't believe that they're accurate. And how can I say that? I can tell you this. Before any of this happened, when Ryan Litchfield and I used to teach a power hour together, and Ryan calls me one day and says, have you noticed that there's some numbers in the unemployment numbers just don't look right? And we go back and forth and back and forth. And Ryan actually gets on the phone and works up the ladder of the unemployment in the federal government. He's working up the ladder to try to get the essence behind the numbers. And somebody told Ryan, on a phone call, because Ryan had said the ADP numbers seem a lot different, or different in what's going on, or what was the difference between ADP numbers and the Fed numbers. And the government, the federal government said the ADP numbers are almost the same amount of people that they measure that we measure. I said, wait a second. I was taken back by that. You're telling me that you know everybody who's on unemployment, but you're only taking a sampling of that to give the analysis, the answer, right? And they admitted that the federal government was probably as accurate as ADP was. Then why do I need the federal government? When we had all of these craziness with the 2008, when the market crashed, unemployment took off right after that, right after the housing debacle. What happened? The unemployment numbers were insane how bad they were, but the government, I don't care if Republican, Democrat, idiot, whatever you want to call them, right? The government, I don't know how you could say they made a mistake on the numbers. How do you not know how many people really qualified for unemployment that week? Don't you have it on a computer? Is somebody working on a piece of graph paper trying to figure this out every week? Right? The Fed's focus right now needs to be, how do we keep pricing down? And we're not doing that. They're not focused on inflation. We are focused on spending, and we're not focused on how we're going to pay for it. We are about to set ourselves into one of the greatest financial issues we have seen since the crash in 29. Right? I thought they'd wait for at least 100 years to make it like an anniversary thing. They're not, right? We've got a lot of issues to be concerned with going out, right? Which means you had better get good at learning how to trade the market. You had better get good at figuring out what it takes to make money off of this screen right here, and less concern about what everybody else is doing or says to do. Where are you keeping money right now? If we have no interest being paid in a bank, I get 0.25%, and my bank wants me to say thank you to them. I just got a letter from a local bank. We only use them because they're a block from where we live. We got a letter that said, well, we're going to get rid of all accounts that are under $75,000. I'm like, whoa, you got a big pair. Holy mackerel. Anything under 75 grand, you're just telling those people, you can go away now. We don't want your business any longer. Right? It's insane where things seem to be pushing towards right now. Costs are off the charts. And if you're getting nothing in interest, then why are you keeping the money in a bank and not putting that money into an investment? Whether it is the stock market, which hopefully part of your portfolio is, real estate, as you're looking for other investments, businesses, gold, crypto, right? Other alternative investments, right? Futures, commodities. I'm a big gold, silver type buyer. I'm a very big believer in buying the actual physical coin. You could buy GLD and SLV if you want. That's fine. But I like the actual physical coin. In my hand has cash value to it if I go somewhere with it. GLD, the market crashes, there's an EDP, there's no electricity. Like we had Hurricane Sandy here. We had no electric for a week. How do you get to a bank? The banks were closed, right? Well, gold coin is cash in hand, right? And when I say cash, it's not a fiat currency. It's not backed by the full faith of the government, which I don't know how much value there is in that very much longer if we keep spending without coming up with ways to pay for it. And taxing the rich may sound great, but I don't know if you guys have seen it already, but there are companies out there already saying, don't worry, if you are making all of that money and you have stock, we're going to show you how to not pay the capital gains tax on your stock, even though the government says you have to. So don't think that the rich aren't figuring this out, right? They're coming up with ways, with methods to not pay it, but it will trickle down. And we'll go from, if you made $4 million to $400,000 to $40,000, and you'll be taxed, just like Social Security was. All right? Okay. So caution, grasshopper. How much did ammo prices change after the presidential election? I didn't pay much of a difference. I bought it about 4 or 5 times in the last year, ammo. I didn't pay much of a difference. I give away SBA silver coins as tips to house service guys. There you go. Excellent. Yeah. I'm a big fan of silver coin. I like them a lot. But your system needs to focus on what the market is doing now. So first thing is, let's go take a look, big picture first, and then let's break it down in the shorter term of what's happening there. So if we look at a daily chart, let's see, activate it. Still trying to get the hang of 10 on trade stage. So this is a daily chart of the S&P 500. What happened? Now the red bar is today. So we're down a little bit today. We're down about 9.5 points, 9.25 points. But Thursday, great move up. Friday, all-time highs, all-time closing highs. Phenomenal. Oops, sorry about that. Phenomenal moves, right? Look at how we are setting up on the moving averages. First thing is, let's make it a little interactive here. What do you notice when you're looking at the right side of the chart? Let's say from where we closed below the 8 on that one day, that one gap down day, what do you notice from there to the right of the chart? What are the things that you see? What do you notice taking place, happening in there? Talk to me. Type it in. Tell me what you're thinking. I know what I see. What do you see? So PK said the 8 is holding as support. Karen said it's weakening. Amos said the 8 EMA is holding as support. Boz said it's a good entry. All right. Who else? Barry said the average rose to the gap value. Okay. Interesting. Good. Amos said, and higher highs. All right, so when you look at this chart, right, I told you to look from here. Let's stretch back a little further. Look at the moving averages. First thing I want you to think of there is they're spreading out. Here we kind of are maintaining a distance in there. Spreading out as we had here is continued strength. So that's huge when you see that happening. But why, did someone type that in? Dates holding as support, but why are we not spreading any longer? Why are we not seeing increase take place in the moving averages? What's the difference now from where we were? Look at the moves we had. 1, 2, 3, 4, 5 huge days, right, PK? Momentum is slowing. Robert said we're going more sideways. Jim said it's uncertainty. Boz said stalling. All of them 100% spot on. We are bumping our head on ugly right now. Remember, we've got a 4181, a 4191, and a 4200 level to deal with on the S&P 500. I don't have them snapped on this chart. I'll share it with you on the other chart in a moment. We have all of these levels to contend with in there. Actually, let's go and look at it. Dark black line, 4181. Fib line, 4191, 4200. We had the swing high and the closing high right in here, which we have completely annihilated at this point. We've broken above this Fibonacci line on 3 different days. The last 3 days, we've been above that line at some point. All maintaining as the moving average goes up. And as we look, let's see, how much can I get in there? Okay. So now, what do you notice now? With that Fibonacci line in there, what do you see? Let's see. Amos said we're bumping our heads on the highs from before. I'm not sure, Mike. We'll look at it. Potential engulfing bearish setup, Joan said. Possibly, depending on where we close, Joan, absolutely. Guys, if you notice, this day we got close up to the Fibonacci. This day we got close up to the Fibonacci. Then 1, 2, 3 days we were right there. We were using this Fibonacci line. Just trying to see if anybody catches it. We were using this pivot line as resistance, and the moving average is what? Is our uptrend line. So what kind of pattern? There you go, PK. You got it. Bumping our head, bumping our head, bumping our head, all while our bottoms are coming up. It's an ascending triangle is what we're looking at, a wedge that's forming inside of there. We broke out of that wedge on Thursday. Friday, we hit the all-time highs, the all-time closing highs yet again. Actually, Thursday was the all-time high. At the closing high on Friday, and today we pushed up a little bit. We could not get above the highs of Thursday in there. I'm about it there. We couldn't get above it on Thursday, but overall, you've got to look at the pattern that's structured and setting up. And let me see if I back it out a little bit. All right, from where we originally had put in those original highs at that level, we had this pullback and then the moving average cross and a great climb taking place from there, right? And then this drop down, this was the one day I told you, looked at it drop below the 8, and then we got the gap and go from there. So we've had a lot of strength building up, not strength, wrong word, a lot of pressure building up, looking to lead into the strength. The potential for the strength is here now. That fib line, that 42.37 quarter level is crucial to the success here of the market, or stay above it or not. If we violate that level, you want to look at the 8 moving average, but if we violate the 42.37, there's a good chance we break the 8 as well. And I'm talking about on a closing basis, right? So keep that in mind as you're looking at the S&P 500. And when we go back and look intraday today, here's our 5-minute chart. You can see the strength right out of the box, the gap up this morning, and then that red candle just getting crushed. If we go to, let's see, the ES, which is the S&P 500 in futures, right? So this vertical line, let's see, right here, that is, if I put my mouse here, you'll see this shows on 6/11. I put my mouse here, it shows 6/13. This is yesterday. This was Sunday. Thanks, Boz. I'm glad you like the backdrop. Yeah, we're in the office. It's definitely set up for trading, that's for sure. So we're actually going to add a few more monitors here as well. So look where it happened. We gapped up on the open Sunday night, and we chugged along. And what happened? Here we get to 2:30 in the morning, Eastern time. We push up to 3:30, and we're back down. We're in Europe right now. This is the European Open is right in here. And we're just hanging out, and all of a sudden, right about that 7:30-ish level, we break these previous lows that we had put in. Let's see, I like the other way better of doing this. All right, if you look there, we finally break, and that was a collapse of everything that took place. But all of this, you can go back and look at the NQ or for the NASDAQ, or the ES for the S&P, or the YM for the Dow, to get a better understanding of where the market had been from last night. Keep in mind, markets are open 22.75 hours a day. Right? They close on Friday at 5 p.m. and open up on Sunday at 6 p.m. And this is Eastern time. You can adjust for your time zone, right? Just making sure I got all the comments in there. So right now, we're pulling back a little bit. Does that scare us? Well, today is not a bullish day, and that's okay. But you've got some numbers now to guide you of what you're looking for. You've got a fib it. You've got an 8 moving average. If we stay above, we're okay. We start violating. Now I start getting a little nervous. Yeah, guys, if your screen's a little blurry, sorry about that. We've got an HD issue that did not enable on Zoom this morning. Ironically enough, we had to ask permission to get it, but we have to enable it, and we did, but for some reason it didn't take this morning. So we'll have it better for the next time around. Normally we do pretty good with it. Okay, so where are we at? Let's do this. Give me the tickers that you want to take a look at. What stocks do you want me to pull up here? AMD, Snow. Actually, I missed Jim's. Snow, S-N-O-W. I like it, TLRY. I like me some TLRY. All right, let's see. On Snow, right, which is Snowflake. All right, let's do this. So let me ask. All I'm seeing is TLRY, AMD, and Adobe. XLNX. Okay, let me ask you guys this. Would it be all right if we spend a few minutes here of the time we're looking at candidates to go through and talk about redrawing the Fibonacci on Snow? Give me a 1 for yes and 2 for no. You say, let's just focus on picks, and we can do that. You give me a 2. And don't worry, if you give me a 2, I will let everybody know your name, address, and phone number. I'm kidding. Bring the chart back up. We will. Just getting the answers as they're coming through. We'll get it, Jim. Sean's working the magic in the background. I just teach. He does his thing on the other side of the room. All right? Learning fibs will answer any chart. Okay. No, I wouldn't throw you under the bus, Sean. Not at all. Okay. So we look at the fibs. We want to go over to a template with no moving average, excuse me, on it at all. We don't want any indicators to influence us here, right? That's number 1. Second thing is, I guess I'm going to be drilling it with this. Here was my original fib right in there, right? That's where I drew from. That was my V bottom to V top, or top to bottom, I should say. And we're looking at the 618 as our level of violation. We got through the negative 618. We need new fib. So I've got a Fibonacci that's here. We had that move down, came back up. This was kind of a sideways move, and we dropped down to there before we got a bounce up. So normally, when you look at changing fibs, there's a couple of things you've got to focus on. The first one, if we violate the negative 618, which is where my mouse is right here, that's the negative 618. If we violate that on the close, it doesn't mean, ooh, redraw now. No, it means look for a place to start a redraw. Doesn't mean it's today. Look for a place to redraw, right? We did that. So this says it's time to redraw, but that's one of the times. If it violated on the other side of the fibs, what I put down is the 882. On the close, not a wick. If it just, the wick went through the 618, negative 618, or above the 882, that doesn't matter. It's a closing price that matters there, not the wick. All right? So if it closed above the 882, that's another place to start considering a place to redraw a new fib. So there's 2. If you had a move that was, let's say we never violated the 618, but what if we moved from here, let's say from where that low was, what if we moved all the way up here and then failed? The question you'd have to ask yourself is this move greater than the previous fib? So we had, and of course I'm making it up, right? We had $123. This is $113. No, my bad. Let me get rid of this. That's why. Okay. $140, 139. So is 139 greater than 123? Yes. That tells us it is time to redraw the fibs. Again, doesn't mean we have to redraw them this second. It doesn't mean find someplace right now. When your next V bottom, V top set up, it's time to redraw the fibs. That thing could be taking off and skyrocketing. We don't have a V top yet, so we need to wait for that V top to kick in before we do that. Okay. So that's the next place to consider of redraw the fibs. The fourth one, which we don't use very often, but ironically has come up recently, is your fib starts getting old, 9+ months old. And there really is no exact number. You got to look at the pattern. 9+ months old. It's time to start considering, is there really any validity left in this fib at this point because it's so old, so aged as a pattern? In other words, there's newer patterns setting up now that are really taking precedence over what happened a year ago. And we're seeing that on some of the stocks in power option plays right now. We're finding ourselves having to redraw some things out, even though none of the other patterns or reasons played them, came into play at all. So we're going to back this up. Never, ever, ever delete your fibs off of the screen. We're going to come off of this swing high right here, and we're coming down to that swing low right there. I think I caught it. Let's see. Yep, got it. And then we're going to drag this out to the right. See if, let's get rid of some of that. Okay. So make it a little bigger on the screen. Now, what's next? Well, this is SNOW, S-N-O-W. Let me bring this up a little bit higher on the screen. There we go. So now I want to see, do I need to split any levels? Do I need fibbits inside of here? And that's what the black lines that you saw on some of the previous charts are. They're called a fibbit. But let me explain how and why we do this. We're going to look at the distance between any two fib lines. And normally I do them between the 0 and the 236. And I do them between the 0 and the -272. That's normally what I'm looking for. So what do we have? And I'm not looking for an exact number. I'm looking for about. We've got 212 to 240, we'll call it. So what is that? $28, right? That's a $28 difference. Now we're going to look over here at what's called fibbit. A fibbit is 2 times the Wilder's average true range. If you don't have fibbit on your chart, that's okay. Just set up Wilder's average true range, set it up with a setting of 13 days, and it shows about $10.50. So take the Wilder's average true range, 1050, and double it. Carry the 1, 21. $21, right? Told you I'm not a math genius. It's $21. Is the distance between these two fib lines greater than $21? If the answer is yes, you need to split that line in half. That's it. This is too big of a move to get a 2 to 3 day move and have the opportunity to exit a trade, part of your trade, in that first 2 to 3 days. So what we do is we insert what is called a fibbit. On my charts, I've got them saved. I have a -136, which is down here. And I have a 118, which is up here. Now we go 212 to 226. That's 14 points. I look up my fibbit is, well, we'll do it here. My fibbit we said was 2 times that 1057. So that is 21. So we're less than 21. Life is good. You want to have these lines here to help you find the explosive moves to get you out of the first exit of your trade, which is where you will prevent having great risk in that trade if you've taken some off earlier in the trade. And then we look to see, do we get continuation move or not? So in other words, if I were looking at here and I said, where's my exit? Because I want to be out in 2 to 3 days. So we saw the move up, we pulled back, we took the entry, boom, it gaps up. The next day we're out of half of the trade. We would have been stopped out potentially, depending on how you set your stops up. But from there, it took another from here, 1, 2, 3, 4, 5, 6, 7 days to get up to that next resistance level, which makes it 8 days in total, business days. So it's about 2 weeks for that to happen, somewhere around there. So for me, I split that level so it gives me a better understanding, a better opportunity rather, of where to get out of that first portion of the trade without having to wait a long period of time, especially in this marketplace with the whipsaw. And when we're up 515 grand in our sim on power option plays, I think it's 515, 520, something like that. Oh, I've got it right here actually. 510, 120. No, 515, 892. We started at 510, 120. We finished up at 515, 892. So about 516,000 using this exact method right here. So you definitely do not want to miss adding these in. Now, it's not just this level. You could look at it for, and should look at it for every single level there is, every fib level there is. Okay. For every Fibonacci level there is. We go back to template number 2. And there's our chart. So all of that to answer the question on SNOW, S-N-O-W, of good, bad, or indifferent. What are you seeing on the chart? That came from Jim. All of that to answer on Jim's question of what do I think? So now, what do I think? Oh, let me back up. Before I even tell Jim what I think, and the rest of you can listen as well. Was this helpful? 1 for yes, 2 for no. Was it worth stopping, going through, doing the analysis, talking about the whys? It's great to say do it. To me, I think the why is more important. I know it is. Okay. Like 13 of you out of hundreds. Okay, good. There we go. All right. So, Jim, I want to see the whole fib. Oh, wrong way. Come on, Rob. Stop. I don't have a choice. That's as big I'm going to get it. So we had a nice move up and a pullback. We had the gap down and the move. The 8 moving average is just a little high for me right now, but we're looking like about 240 on the downside, Jim, and 256 on the upside. I'm okay with a trade here as long as you understand your risk is somewhere down below that 239.5 level. Your stop is somewhere down below, and we made it down on the gap Friday to about 233.5. So you've got some room for that thing to move. So a little caution there, but 256 is our resistance level. So definitely have an opportunity there price-wise. I hope that was helpful. And if you have more symbols, folks, just drop them in. Let me just try and get back so I can see who asked the questions for the who. All right, they were all in one place. That's good. AMD was the next one. Very old fib. Back to July of last year. We're at that that year. But look at it. There's nowhere to redraw. It's just ugly. It's ugly. So we're kind of stuck with the fibs that we have. Now, that being said, who was it? That was Trader Will. Well, look what's happened in the last 2 weeks. Right from the orange bar, the day before the orange bar, actually. We're just in that sideways pattern. Nothing bouncing off the 8 is a trust factor for me because I don't have, historically, it's not doing anything. Is it going to hit the 8 and take off one day? Possibly, up or down. I just don't know where that is. 83 is resistance and then 87, but I'd be very cautious on entering new on AMD. Selling diagonal or something? Yes, I'm okay with that. TLRY. All right. So TLRY is, marijuana stock. It's had a phenomenal run, right? Here, look, look at this. Ran up to 70. I remember I was on a YouTube channel and I had taken an entry off TLRY right here. One of the students in here who's a friend of mine, Steve, he lives out here on Long Island, a little further out east than I do, messaged me like, dude, you got any more like TLRY? Once he saw it in class here in Power Hour, we talked about it. Like, this wasn't me coming up with, ooh, TLRY is going to take off. It was all part of the New York Bets type stuff and so forth. So no, I got nothing for you. But I'm okay being lucky once in a while on the trade too. But I called it in the right spot. It just took some time, a couple of days for it to actually make the move. And when it did, that covered call was taken away at a much higher price stock than what I had sold it at. Still made good money on it. But so TLRY I sold on Friday. We're still in an overall bullish pattern. If it closes where it is right now, it is at a bullish neutral bias. If we draw the fibs on here, lower price stock, so it's tough getting good fibs just because of price movement. Yeah, that's not bad. That's okay. Let me just make sure there wasn't something. Yeah, we're not going to draw off of this. That anomaly we're not drawing off of. We're not anywhere near that 70 level again. So we're fine with what we're at right now. All right. So downside target, you're going to look, you've got the 1881, but I'm looking also for the 1827, which is the 21 moving average. On the upside, we're looking at $20, but I think it makes it to 22. Some of the previous numbers it's been to before. Markets are down today. You can't take that as a bad thing. I'm in a selling position. Premium is still dropping on it today. It's still lower. I just checked it. It's still lower because I've got it on my phone. It's still lower than what I paid for it. So I'm okay with that short leg, that short put. So Paula, I hope TLRY helps. I would be a little cautious on an entry until we get back above the 8 though. Adobe. It was John asked for Adobe. All right. Adobe has earnings coming out on 17th. They are confirmed. We have them down as a bullish bias in power option plays. Look at that. It's just screaming. We talked about this over the weekend with it not really coming back to the 8, but following along the 5, which is what it's done. Right? I would be careful on anything with Adobe right now just because of earnings coming out. That is John. Day traded. John, of course, is the way we do it in power option plays. We're looking at 554 is the downside and 565.5 is the upside target. But once again, little caution with the earnings. XLNX, Xilinx, Mike's asking. All right, so semis. I look at the chart and my eyes hurt. It's just very annoying. Just the picture, it's all over the place. This is, so Mike, for me, that's the first thing I see is I don't get a comfortable feeling with how we've made these moves. Right, all of this stair step type stuff that's happening here, that's the cleanest move we've got is right here. So let's see if what we get off of there. Actually, hold on. So look at gap up, pull back, gap up, pull back, gap up, pull back. That's a good move, but we violated already. This here, I've got the hiccup in the middle. Yeah, that's actually where we're going to draw off of. right off of that swing high there. So let's go here. That wick looks like it's lower. So 112 to 120 is 8. We need a fibit in there. So we're going to add our 2 fibits in place. I missed the other one. Oh, there we go. Let's go back to the moving averages now. Let's bring her in a little bit. A little bit too much. Okay. So bumping our head on ugly. What's ugly? Any kind of major resistance level that we just keep running into. Ugly. Right? 129.01. We're bumping our head on that. So Mike, for me to want to take this trade, I need to close above the 129. So get above, retest, bounce, and there's the entry in the trade. Now, that's me. For you, Mike, it may be get above, retest intraday and bounce, and I'm taking the trade. Whatever works for you is okay. For me, I'd rather see the close above and a retest and a bounce to get a stronger signal of it's working for me. So I hope that was helpful there, Mike. And then we've got NVDA, which Keith asked for. Okay. Once again, actually, NVIDIA was when we were talking about with the 5 moving average yesterday. Look at this. Nowhere near the 8, which is the pink line, but the blue line, all over it. Regular basis. Keep coming back, testing it, and bouncing. So you could use the 5 moving average if your other moving average is your longer one, the 8 in our case, 10 for some of you. The longer one is if it's not holding. Right, so what are we looking at here? No need to redraw fibs just yet. We don't really have a topping pattern anyway. But we're looking at 709 as a downside target. Let's see. So we've got 709 to 746. So it's at 38. We've got 40 points. So we don't need to split this level in here. We're good. Right, so target-wise, we're looking at 746 as our upside target. That's our next shot of where it goes. If you were a day trader, you would have been looking at 708.81, 708.81, right? On NVIDIA, watch. Let's go check it out. If I can find my mouse, it'd be wonderful. Come on, go away. $708.81. All right. So what are we looking at here? We said, what did it do today off of this 708.81 based on where it closed yesterday? And the bounce, was there an opportunity for a bullish entry? Good hard smash. We closed just below. We opened a little lower. We pushed up. We closed on the next candle. Closed there was 709.68. So a little bit. What we got? 68 plus 19, 87 cents. So it closed 87 cents higher. So maybe not, up to you. You got to decide if that would have been an entry. This next one, if you didn't take the previous one, you might have taken the bounce, but we got to close right here. And that next candle at 10 o'clock gave us the bounce that we're looking for. There would have been an entry right about $710-ish, we'll call it, just round numbers, about $710. And right now it's at $717.5. Right? NVIDIA. Bullish bias. 746 is our target, and we had it down as a day trade yesterday. That's what we're looking for today. That, if you have a $10 move there, $7 move, $7 move, and you have a 70 delta, just make it nice round numbers. 7 times 7 is, it's about $5, not accounting for any increase in gamma and delta. It's about a $5 increase in your options price, right? Overall, pretty darn good, right? So I like it, Keith, a lot. Let's see. Who has a split coming up, Will? What did I miss? NVDA. Okay, you know, I didn't even see it. I completely missed that one. I will check it. 4 for 1. There it is. You had it in there. 4 for 1 on NVIDIA. Nice. Okay. We covered splits in Trading U, Will said, on October 7th. So if you're in Trading U, guys, you can go back and watch that video on Trading. All right. Let me do this real quick while I am here. All right, guys, it's here. It's time. We've retired the old charting program, the old name. It is now called Omega Chartz with a Z. You've seen emails come out the last week and a half or so about the charting program, you know, backing or reverting to changing over to a new version. This is it. It's got a VWAP tool inside of there, which is an excellent tool. Of course, the Pro Scanner is in there, the Trend Outlook library. The program right now as an early bird tool, if you do not have it and are interested, is $695. It's going to be, you know, $995, $795 will be the regular price, but it will not be at $695. Right? This is early bird. Right? So if you have an interest in it, Amy, could you drop a link in there for that? That would be great. If you have an interest in it, click on the link, guys, and check it out. It is a phenomenal program. We're working on the trainings for it now, so that's part of the early bird. You got the program. We'll give you some videos to get you started. Don't worry about that. We have plenty of those. But we're redoing everything over right now to the trade from where we were to Omega Chartz. So make sure you check that out. Like I said, Amy's going to drop that in for you. I'm assuming she did. I can't see it on my laptop here because I've got the PowerPoint open. Oh, there it is. Okay. Hey, watch it there, Robert, with the VWAP. Take it easy, huh? Not Marius, not as a starter. No, there is a way of doing it, but as an add-on, but not as a starter. Fantastico. Fantastico. Let me see. Do I have a downside target? Monica said on Love. Let's take a quick look at Love. I like the airline stocks, guys. Maybe not Delta after the freaking pilot attendant went crazy, but let's see. Yes, Love. If you don't know what I'm talking about, go check it out. Oh, they've already flipped, huh? There's Delta. A little better picture on Delta, but not by much. Love, let's see. That was Monica. Oh, all right. So, I mean, that pattern is kind of rounded over. All right, let's go grab a fib. Sorry, I get very in the zone as I draw. So 56 is where I see the downside on it for now, Monica. So caution, if you're in a long trade on it, you've got a little bit to go. If you're in a long trade, hopefully you've bought some protection on puts to cover yourself. Monica, you're welcome. All right, ladies and gentlemen, there we have it. You have a great rest of your day. We're going to leave the room open a couple of minutes so you can grab that link in the chat box. Have a great rest of your day. God bless. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Take care, folks, and I will see you at the next update. Bye for now.